Hello, everybody. This is Brad Lewis with Premier Marketing. Thanks for joining us today and taking time out of your busy schedule. Today's webinar is What Life Insurance Do You Write? And this is the fifth webinar that we did in this series for Life and Annuity Resource Center, or what we call it as LARC. And so this is the fifth and final one. So if you missed one of the previous four webinars, we're going to actually host replays of those on the LARC site after today's call. So it'll be up by early next week at the latest. So if there's one of the other ones that you missed. So the first one that we did was how to increase your income. And then the second one was unlocking sales opportunities using the confidential needs analysis. Following that was the 6 benefits of FIAs in retirement. And then last week we did the 8 reasons everyone needs whole life insurance. So, and today, like I said, we're going to do what life insurance do you write? I have on the call with us today a colleague of ours, Brad Weber from Brokers International. Brokers is a partner office of Premier's, and they help support our life and annuity sales, give us resources, and just a great asset to have on the integrity team alongside of us. So that's how the connection is made there. So with that, I'm going to go ahead and turn it over to Brad and let him take it from here.
Thank you, Mr. Lewis. I appreciate it. Yeah, we'll jump right into it here. Our header here, what life insurance do you write, and will it actually add value? We'll show you some examples of where it could potentially add value for a few different client scenarios, hypothetical examples. So when we jump to the next screen here, our important notice, and I know you've seen this before, but Brokers International Integrity Marketing Group, any affiliates not providing tax, legal, or accounting advice, materials for informational purposes only, for financial professional use, not for use with the public. So if you've been into the Life and Annuity Resource Center, you will see there are life trainings that are available out there, what we call life trainings available on the Life and Annuity Resource Center, where you can gather or gain additional information. And, just like a scenario where you go into your doctor where, they're looking at prescribing something for you, they're going to need to ask some questions of you to gain more information. And the more knowledge you can have, the better questions you can ask of your clients to make sure that you're providing them with a solution that fits their needs. So if you're in need of additional training or additional data or resources, please go out to the life training section there, and you can gather some additional information about how to help out your clients. And one of those pieces, as Brad mentioned, is the confidential needs analysis. So if you were on our prior scenario or prior presentation, you would have already seen the confidential needs analysis. It is housed within the Life and Annuity Resource Center under financial inventory, and then we call it the confidential needs analysis. And we're going to gather information on your client. Now, maybe if you're already working with them, you already have some of this information, but we want to gather as much information as we can. We want to ask them for their date of birth. Again, if we don't already have it, we want to ask them information about their spouse if we don't already know about their spouse, their name, their date of birth, some information about the spouse as well. We want to ask information about the children. What are their ages? Are they still dependents who are living in the home? Are they independent? Are they outside of the home? Do they have their own family? But depending upon the type of coverage or the scenario specific to your client, maybe we want to include those children in on the conversation. Maybe it's a conversation about extended care. We need to ask this client, do you own a long-term care insurance plan? Yes or no? What concerns do you have about extended care or long-term care? We've listed 4 of the most common concerns there, but we also give you an opportunity to free-form, put some additional information in there, maybe if there's something different that they have concerns about. And with that extended care conversation, maybe you do want to include the kids. Maybe that's important information. You want to gather them in to be part of that conversation as well. You want to ask them about life insurance and what we call the golden question. Do you have anything that acts like life insurance? Are you self-insured? Do you have anything that passed probate free to your beneficiary or beneficiaries? And whether that question is answered yes or no, if it's answered yes, obtaining an amount that could potentially be used for um, from a retirement standpoint, maybe there's a way to put some of that money into an annuity, or if they answer no to that question, obviously there's an opportunity to help them from a life insurance standpoint. I ask them a little bit about their retirement income. Maybe they're already retired. Maybe they're getting close to retirement. If they are still employed, what is that monthly income for them and their spouse? What do they anticipate getting from Social Security? Are they one of the lucky individuals who have a pension? What is that pension amount that they're expecting to receive? Different things along those lines. So asking those questions and being able to gather that information is extremely valuable. And we'll show some examples of where that Social Security specifically comes into play. So this first hypothetical scenario, we're taking a look at Bridget. Bridget is 65 years old. Through that confidential needs analysis, we identify that she has 2 kids. She is a single mother. She does not have long-term care or a plan for extended care. She does not have life insurance, and she does not have anything that acts like life insurance. She's not self-insured. She doesn't have a 401k, a 403b, any sort of retirement account that she could draw from. So when we ask her specifically about that long-term care concerns, or we phrase it as extended care, we ask her in that section what her concerns are. She specifically says she doesn't want her kids to experience what she did in taking care of her father. So she had a personal experience taking care of her father. She doesn't want her kids to have that same experience. And so through the Life and Annuity Resource Center, you submit her information and the solution that we identify for her. And I love this slide because of Bridget's big smile there. It's a great smile. We come up with a simplified issue IUL product. She can get a $100,000 death benefit for around $8 a day. That policy or that product has the ability to build cash value. She can get this policy without going through an exam or providing fluids. It's a simplified issue product, and it has living benefit riders. So in the event that Bridget needs long-term care or has an extended care event, maybe it's home health care or something along those lines, she can't perform 2 of 6 activities of daily living, she can access the death benefit through her living benefits on her policy. Whatever she doesn't spend, or if she never has a extended care need, she can pass to her kids as a tax-free death benefit. And if she has an emergency where she needs to access her cash value, she can gain access to her cash value as a tax-free benefit as well. So she's got a bunch of different ways that she can utilize this policy. Obviously, looking at or utilizing them in all the different ways is going to exhaust that death benefit. So she's got different options that she could potentially access, again, as living benefits to her, as cash value to her, and as a death benefit if she never needs to pull from those other buckets. Now we're going to look at a scenario with Tom, and through the confidential needs analysis, we know that Tom's 65, again, same age as Bridget, and he is unhealthy. We know, whether he's a client of yours or whatever the scenario may be, you gather information on him, medications, health history. And we know that he's not healthy. He does have a wife who's 65. She is healthy. But Tom, again, similar to Bridget, he does not have long-term care or an extended care plan in place. He does not have life insurance. And he says, no, I'm not self-insured, unfortunately. I never saved in or didn't save enough in a 401k, 403b, any sort of retirement account. He does indicate a Social Security benefit for himself of $2,000 per month and a Social Security benefit for his wife of $450 per month. And so we look at a scenario and we say, okay, Tom, no problem that you don't have these things in place. We could find a solution for you in what we call a level whole life product, aka a final expense product. We'll call it a level whole life product for him because it sounds better than a final expense product, but we can help you with some of those things. We can get you a $10,000 level death benefit for about $2 a day. This product, again, would include some living benefits if you needed to tap into that. With the $10,000, obviously not a huge amount, but it gives him some peace of mind to have that in place. And it also helps him, so if Tom passes away, he can offset almost 2 years of his wife's Social Security income tax free. So where do we get that amount from? So I'll back up to the prior slide. So at $10,000, if Tom passes away, his wife would receive the $2,000 a month as opposed to the $2,450 when they are both receiving the benefit. And so the 450, the lesser of the amount would go away. She would get the 2,000. So if we take the 450 times 2 years or 24 months, that's how we get roughly the $10,000 amount he applied for, and being able to offset that lost income of the 450 per month for his wife. Now we're going to look at another scenario for Tom. So in this case, not only, unfortunately, did we find out that Tom is unhealthy, he's actually uninsurable. So we tried to get him that level death benefit, and the carrier unfortunately said, he's not eligible for the level. He's not eligible for the graded either. So what can we do for him then in this case? Again, these bullet points are the exact same. This is the same scenario for Tom. But now we need to look at a guaranteed issue product. So we're looking at a guaranteed issue whole life product. We've got the same $10,000 death benefit, but it's going to cost him about $3 per day for that $10,000 death benefit now. And there's going to be an elimination period. With most carriers, it's going to be a 2-year elimination period where instead of receiving the $10,000 death benefit, they're going to receive 110% of premiums back in that 24-month time frame or that 2-year elimination period. Then some carriers may have a longer elimination period depending upon the product. We'll want to make sure what that elimination period is, but generally the carriers are going to offer that 2-year elimination period. But he can get this policy with no health underwriting at all. Again, guaranteed issue product, and can also still provide that same benefit for his wife. So if Tom passes away, again, we know he's not healthy, his wife is healthy, we can offer this benefit to him to be able to offset that lost Social Security income. Okay. The next scenario is on the opposite end of the spectrum. So we're looking at Tom and Bridget, who really hadn't done any planning at all. Now we're going to look at the Daniels, and the Daniels seem to be in a good position. They have a retirement income of $375,000 for the household. They indicate that they are self-insured. They tell us that they have $4.6 million in an IRA between the two of them. They have 4 properties that they own. they have 2 children, again, we'd want to collect more information about those children, but whether they're dependent, living on their own, or what the scenario is with them specifically, we'd gather that information to be able to have this conversation with them. And so some agents might think, well, the Daniels, they really have everything in place. What could they possibly need life insurance for? They've got a nice income. They do indicate that they're self-insured. They've got the 4.6 million. They don't need anything more than that. But there could still potentially be a solution for them, and it could be in the form of a second to die index universal life policy. So in this case, we could look at getting them $1 million death benefit for about $1,500 per month. We could look at a policy that's built for cash value. We could also look at some policies. There are survivorship policies that you can guarantee. So you can guarantee that out to age 120 or 121, whatever that carrier's maximum maturity age is, or you could guarantee it to some other age as well. Now in their scenario, when the Daniels pass away, and obviously this would be a second to die survivorship policy, the life insurance could be there to help pay out as a tax-free benefit, and it could cover some state or federal estate taxes. We know that there's been some updates to the federal estate taxes and where those are going to be, but in 20 years, we don't know where that estate tax is going to be. So having something in place for them for their 20 years of retirement or whatever it ends up being for them when they both pass away, having something in place to be there to have some liquid assets when the Daniels pass away for their beneficiaries, again, to help cover those taxes or whatever the case may be, if it is just a tax-free death benefit to pass along to those beneficiaries. A great thing to leave a legacy for them, so that we talked about this in previous slides as well, not having to liquidate other assets. So they've got a nice liquid asset there in the life insurance, so they don't have to liquidate maybe one of those other properties that the Daniels owned or whatever the case may be. They don't have to liquidate that retirement account. So having some planning in place, even for those individuals who seem to have things in place already, so that they've got a nice benefit down the road. And so again, where do you go, no matter what your scenario is? And obviously all scenarios aren't going to mirror these exact situations, but we wanted to present some examples of what you could potentially run into. Go to the Life and Annuity Resource Center, go to the Ask a Specialist, gather that information in the confidential needs analysis, submit to our specialists, and we'll provide you with a solution that fits exactly with what your clients are needing, what they're looking for, and individualize it to them. And here's a screenshot of what that looks like. It shows an example of the annuity side, but obviously we'd want to click on the life side. And then there also would be an option too, if you just have a question, you can go into the Life and Annuity Resource Center, ask a specialist, and submit an option for just a question if you're unsure of what to do with a client, or you just have a question about product, you can submit that there as well. So what are we asking you to do? How can you grow your business? What are the next steps? One, we ask you to download that confidential needs analysis. Go into the Life and Annuity Resource Center, go to the financial inventory, and pull down that confidential needs analysis. Number two, ask that golden question every time. Do you have anything that acts like life insurance? Do you have anything that passes probate free to your beneficiaries? Again, whether they answer yes or no to that question, there is the potential for a sale there. Submit all those scenarios. Once you gather that information from your client, submit all those through the Life and Annuity Resource Center. And then we ask, or we put this goal in place for you along with Premier. Write at least one annuity per quarter, one IUL or whole life, some sort of permanent policy per month. You'll definitely see the benefit from a ability to grow your business standpoint. So I will pause there and open it up for questions. This one's a pretty quick hit in terms of the prepared slides.
Hey, thanks, Brad, for covering that. That's awesome. I
You
think
bet.
all those case scenarios were really realistic and probably resemble a lot of clients that agents have out there today. So if you do have any questions, I forgot to mention this at the beginning, so that's on me, but you can type those into the questions section, or you're welcome to reach out to the team here at Premier as well. So for the life side of the business, we have Kathy and Kelly that are standing by to help you with your life business. And then again, on the annuity side of the business, Shad and Shay are both available to answer any questions. All those folks are familiar with Life and Annuity Resource Center, how it works and how you can use it to help grow your business, because that's really our goal here, is to find a way to help you grow your business easily. And we've got a ton of great tools out there that you can use, all the way from what Brad talked about, the life training center. We have an annuity training center. We have videos on there for you to watch, things of that nature. So Brad, I don't see any questions popping in, so I'm going to go ahead and thank everybody for being here again. And Brad, thanks for your time to join me today. We appreciate the partnership and looking forward to working with everybody on the Life and Annuity Resource Center. Thank you.
Yeah, sounds good. Same. Thank you.